Today we're inspecting a property where the owner lives upstairs, while the downstairs has been converted into an Airbnb rental with a brand new kitchen and upgrades.
So because I live upstairs, am I able to claim tax depreciation on this Airbnb part that I rented?
Yes, you definitely can. Everything that you put into this investment property is tax depreciable, so we can claim everything in here.
So does the age of the property matter when you're claiming for tax depreciation?
Yes, it does. When it's brand new, it's fully eligible. When it's being renovated and it's existing property, it might be too old for depreciation, say it's 40 years old for the original construction. Anything that's renovated beyond that point is eligible to be depreciated by the owner.
And with this one being an older property, but the downstairs here being renovated by us, it would be what we've renovated?
Yes, so any capital works deductions, so the building and obviously flooring, any furniture you might have included, any fixtures and fittings, we can appreciate all more.
Would I be entitled to claim for the appliances, furniture and soft furnishings that I've got in the Airbnb?
Yes, all of them. Yeah, as long as it's for an income producing asset, it's all depreciable.
Okay. And do furnished properties have a high depreciation benefit compared to an unfurnished property?
Yes, they definitely do, especially if the furniture is eligible and it's brand new when it was rented.
And what would make the furniture eligible or ineligible?
Furniture's eligible as long as it's brand new at the time of the investment property income producing. If it's existing furniture that has been bought secondhand, we can't claim it.
With the cost of furniture and furnishings, do you ask for receipts from the owner to calculate the depreciation for those?
Yes, the costs are important along with the dates of purchase of the items. If they don't have receipts, then we can put in a conservative effort for the cost that we can include in our depreciation schedule.
And would the claim be different if this property was rented out long-term rather than short-term through Airbnb?
The eligibility for depreciation all comes into how long it's available. So if you have say the full financial year, you can claim whatever you can claim for depreciation. If it's pro rata for a smaller amount of time, then we can still depreciate for that portion of time that it's available to rent.
So if I had some friends and family staying in here for a couple of months, that wouldn't be...
No.
That would be a pro rata.
Yeah, that part would be excluded, wouldn't be eligible for depreciation.
So this used to be the laundry and we fully renovated this as a kitchen for the Airbnb guests. So what would be claimable here?
Well, everything that's been installed, so the whole kitchen, overhead cupboards. We've also got some plant items which we can then depreciate faster than the structure. So we can take the induction cooktop and the oven and the range hood here. So we'll be able to accelerate the depreciation for you from this area.
So we do have a spa here that we share with the Airbnb guests and a little sort of garden courtyard. Would anything like that be claimable?
Yeah, there'd be quite a lot of things. So obviously the spa pump, the spa heater. There's a rainwater tank and pump out there. There's also some raised garden beds, which we can put in as a structural improvement. Things like fencing, we can share half of those. There's also hot water systems. If there's ducted air conditioning between the two levels, we can apportion that. Also might be solar panels and inverters that we can claim as well. So we'd probably go 50-50 if it's fully rented out during the year.
Great, thank you.